Emerging markets account for more than 75% of the global economy, but investors and logistics industry executives are uncertain about the outlook for them. The International Monetary Fund says that these economies will grow at 4.6% as a group in 2017. That's up from 2016, where they were thought to grow at 4.1%. Agility surveyed logistics industry executives and found them divided. 53% think that the IMF forecast is about right, but a significant number, 43%, say that the IMF is too optimistic. So why the murky outlook? On the plus side, analysts look for modest increases in prices for key commodities that drive many emerging markets' economies: oil, gas, metals, and minerals. Higher oil prices help Middle East producers such as Saudi Arabia, Iraq, Iran, and Kuwait, and also bring big benefits to Nigeria, Russia, Mexico, Venezuela, and other energy-dependent economies that have been hurt by a 2-year slump. If metals and minerals prices bounce back, look for Latin America's largest economy, Brazil, to benefit. A healthy Brazil helps Peru, Chile, Argentina, and other nearby countries. A rebound in commodity prices could also mean an uptick in sub-Saharan Africa, especially South Africa. Countries tackling old problems could enjoy a surge in growth. India's economy is sizzling. One reason is that India is finally replacing a complex tax system that hurt investment and discouraged consumption. Less clear is what's going to happen as India moves to take high-value rupee notes out of circulation. That decision is causing confusion among consumers who aren't accustomed to mobile transactions and other cashless payments. But in spite of the confusion, logistics executives in the Agility survey were most upbeat about India. They see China slowing, but most, nearly 66%, say a slowdown won't affect expansion plans or prompt them to shrink operations there. China is giving off mixed signals. Banks are sagging under bad loans, property values are artificially high, and the number of new workers is shrinking. Even so, economists say Chinese startups are making for a more dynamic economy. So what's clouding the picture? For one, the populism and anti-globalization feeling in rich countries that buy goods from emerging markets and invest in those countries. Unhappiness with the status quo is what sparked the UK's Brexit vote and helped propel Donald Trump to victory in the US presidential elections. Those same feelings are bubbling under in Italy, France, Germany, and other developed countries. People there are unhappy about open immigration and trade liberalization. Mexico is one emerging market that is jittery about a backlash. Tougher US trade policies would damage the Mexican economy. Political instability is always a concern in emerging markets. In 2016, key countries such as Turkey, Brazil, South Africa, Nigeria, and Venezuela faced a host of serious challenges that have had lingering effects. The health of the US economy will be important for emerging markets. US consumers spend heavily on imports, and higher interest rates harm countries such as Turkey that borrow extensively in US dollars. So what's ahead for emerging markets in 2017? What's in your crystal ball?